Good day, subscribers, and welcome to Momentum channel. In this video, we're going to take a close look at two undervalued real estate dividend stocks to buy or add to your watch list right now. These stocks include two real estate investment trusts, and the first one to review is no other company than National Retail Properties, with ticker symbol NNN, traded on New York Stock Exchange. As you can see here, this stock has a dividend safety score of 70, which is considered to be safe according to Simply Safe Dividends. It is showing a dividend yield currently sitting at 4.26%. The stock's last trading price was at $48.79, and it has an overall market capitalization of $8.5 billion. National Retail Properties invests primarily in high-quality retail properties subject generally to long-term net leases. As of September 30th, 2020, the company owned 3,114 properties in 48 states with a gross leasable area of approximately 32.4 million square feet and with a weighted average remaining lease term of 10.7 years. In terms of the volatility, this company, National Retail Properties, and its stock has a volatility score of 1.09, and beta is a measure of volatility in relation to the overall stock market, and a beta of 1 suggests that the stock might be more volatile than the general stock market. As for the dividend amount that this company pays, the company does pay a quarterly dividend. It is paying these dividends in the month of February, May, August, and November. The ex-dividend date for this stock, the last one has been April 29th, and the pay amount due date has been May 14th. An annual payout amount at this time for this stock is at $2.08 per one share. The company has been paying non-stop its dividend, and in fact has grown its dividend non-stop for the past 31 years consecutively. All right, so as for valuation, the National Retail Properties is having its current dividend yielding 4.26%, as alluded to it earlier, which is about in line with its 5-year average of 4.41%, about 3% off from that range. This suggests that the stock may be reasonably valued today. The National Retail Properties forward price to adjusted funds from operations ratio, AFFO, which is commonly used for REIT or real estate investment trust. This ratio is sitting at 16.7, which is about in line with its own company's 5-year average of 16.6. However, if you compare that to the overall real estate ratio of price to adjusted funds from operations, for the real estate, it is sitting at 20.3. So the fact that National Retail Properties has a better ratio there is a good sign. The market appears to be valuing the stock similarly to how it has the past, suggesting that National Retail Properties could be fairly priced if you believe in its health and long-term prospects being solid. And lastly, if you look at the 52-week price range for the stock, the last trading price, it's a lot close to its 52-week high price. In fact, it's actually sitting at its 52-week high price, hitting it today. So that is definitely something to be mindful. If you have not bought this stock, you might want to wait for a little bit of pullback or try to take advantage of the flexibility and actually volatility of the stock price on a trading day to actually keep your hand on this stock at a better price. As for the analyst estimates for National Retail Properties, NNN, the 1-year price target, according to 7 analysts, is at $52.08, which shows an upside of 6.74%. These 7 analysts, according to TipRanks, 5 of those are showing and having a buy rating for the stock, whereas 2 analysts have a hold ratings. And you notice here the overall price range, according to analysts, the lowest range is at $46 and the highest range is at $55. Moving on, the second stock to review, this is another real estate investment trust or REIT, is no other than Realty Income. It is available with ticker symbol O, and the company is called Realty Income. It is traded as well on New York Stock Exchange. Realty Income has a dividend yield of 4.01% at this time. The last trading price for Realty Income was at $70.35, and the company is showing a market capitalization of $26.3 billion. Realty Income has a lower volatility according to its beta measure. You can see the beta is at 0.83, which suggests that if we compare that to national retail properties, Realty Income has a lower volatility when compared to overall stock market. Realty Income, which is a monthly dividend payer company, unlike the previous company that we talked about, this one is listed on S&P 500 companies list and is dedicated to providing stockholders with dependable monthly income. The company is structured as a REIT, and its monthly dividends are supported by the cash flow from over 6,500 real estate properties owned under long-term lease agreements with commercial clients. And to date, the company has declared 608 consecutive common stock monthly dividends through its 52-year operating history and has increased the dividend 109 times since Realty Income's public listing in 1994. As mentioned, the company is listed on New York Stock Exchange with ticker symbol O, and it is a member of the S&P 500 Dividend Aristocrats Index. Realty Income also has a safe dividend score of 70. And if we look further, you notice that it has consecutively paid and increased its dividend for the past 26 years. Their annual payout for their dividend income is $2.82, and their the frequency of dividend payments is actually every month. All right, looking at the valuation for Realty Income, their current dividend yield of 4.01% is about in line with their 5-year average of 4.38%, slightly lower than that by about 9%. This suggests the stock may be reasonably valued today. And their forward price to adjusted funds from operations ratio of 19.8 is about in line with its 5-year average of 18.7. And the market appears to be valuing the stock similarly to how it has in the past, suggesting that the Realty Income or O stock could be fairly priced if you believe in its health and long-term prospects are being solid. Again, if you compare the company's price to adjusted funds from operations or P/AFFO ratio and have it compared to the real estate, the same measure for the real estate sector, the fact that the ratio is lower, it's a good sign and shows in terms of the valuation of the stock is priced at about or actually cheaper than the overall real estate sector. Looking at the 52-week price range though, you notice that again the company is being traded closer to its 52-week high price, so that's something for you to be mindful about. Lastly, if you look at the tip ranks in terms of the price prediction for the Realty Income, here the analysts have a consensus for the price of $73 USD in a 1 year. That shows an upside of 3.77% based on the last trading price. Of the 7 analysts reviewing in tip ranks the stock, there is 4 of them that have a buy rating and 3 of them have a hold rating. The lower range of the price here for Realty Income is at $66 and the higher end of range is at $81 US. Well, there you have it, folks. A quick review of 2 undervalued real estate and dividend paying stocks to buy or add to your watch list right now. I hope you found this video beneficial and gained something of value from it. If you did, please be sure to give this video a thumbs up. And of course, don't forget to subscribe to Momentum channel. Here on Momentum, we post weekly several videos about investing and financial freedom. Thank you, and we hope to see you next time.